Okay, folks, welcome back. This teaching is going to be specifically dealing with the ICT Asian kill zone. Okay, the Asian kill zone. This is the first of several specific times of the day where I like to look for setups. Admittedly, this is the least active time of the day for me. I live in the North American continent on the East Coast, so whatever time it is in New York time in the States, that's my local time. So what ICT concepts are going to be used in this module? Again, the importance of time and price, the Asian Open, the Asian Session, and important characteristics that make up the Asian Session. Okay, first we're going to get into the Asian Open. Now, this time of day, you're going to find that the Australian dollar, the New Zealand dollar, Japanese yen pairs are ideal for this time of day. They're active, their markets are open at that time, and it goes without saying that if their markets are trading actively as it relates to their specific currency and country of origin, this small little window of opportunity for North American traders to trade after a 9-to-5 job could fit exactly what you're hoping to do as a part-time gig, if you will, and or your trading model could be completely built around the Asian session and never be up for London or trade the New York session. Now, the Asian Open can sometimes set up an optimal trade entry pattern that can offer 15 to 20 pips for a scalp. Now, the higher time frame bias is helpful here, but short-term retracements in either a bull or bear market can offer similar optimal trade entry setups. As an example here, this is the dollar-yen pair. And again, I'm not trying to zoom in on these charts because the details are not important at this point. I'm just trying to build up an overview of the specifics about the Asian session that are important right now, the salient points, if you will. There's other details and a lot of details that go into this time frame, but you're going to find that if you are looking for trades in this time of day, these pairs, the Aussie, New Zealand dollar, and Japanese yen, tend to do very well. As you can see here in this example to the right, you can see the Asian Open is delineated here. And if you look at Forex Ltd, that's the demo account I teach with, if you hit Control Y on a 15-minute time frame, that vertical line is going to be delineating what I refer to as the Asian Open. Now, it'll fluctuate back and forth relative to daylight savings time, but for the most part, I'm looking at a window of about 2 hours. So even though it may not start exactly at 7 o'clock or 8 o'clock in the States in the evening time, relative to the daylight savings time shift that takes place, if that shift is taking place in terms of time, like right now we are in daylight savings time at the time of this recording in December 2017. And when we leave this daylight savings time, it'll shift a little bit. But I use a 2-hour window, so it doesn't have a great impact at all. So what I look for is a move that originates or forms immediately after the Asian Open. Another example here, the New Zealand dollar, again, very similar. This one, you can see the optimal trade entry comes down with just one singular candle on a 15-minute time frame. Comes down, gets an optimal trade entry, runs equal highs in the previous day's range, and ultimately runs all the way up to the previous Friday's high. Now, this is all done during the Asian session prior to Frankfurt Open or London Open. Now we're going to talk about the Asian session. Now, the periods when the market is not willing to run in the Asian session. In other words, there's not going to be an optimal trade entry pattern. It will consolidate until midnight New York time. Now, the Asian trading session actually extends beyond the midnight hour of New York time, but I focus specifically in the realm of the Asian Open to midnight. So there's a range of several hours, okay, that I deem as the Asian session for my trading, even though it does trade past midnight New York time. The setup or the information that I glean from these hours prior to midnight are going to be covered in future tutorials and teachings, but there is a limitation because I go into greater detail in the mentorship, but you will get a plethora of insights using this specific range of time. But for now, the importance of the consolidation holds many clues to how the daily range will develop over the remainder of the 24-hour trading day. Now, these will be covered again in future lessons. But I want you to take a look at this example here, the euro dollar. Now, generally, this pair isn't very active during the Asian session. There are times when it is active and it creates a significant higher low, or it begins the daily range higher low in this delineation of time. For the most part, it tends not to do that. So when it's not doing that, we can view this Asian session as a consolidation that will, in future lessons, be very meaningful and significant in terms of our analysis. Much like the euro dollar, the pound dollar, again, generally is not very active in this time of day. So when it is not poised to make a significant higher low during the Asian session or start running off of an optimal trade entry during the Asian session, again, we would anticipate that particular time of day to be in a consolidation. And again, these consolidations will be very significant to us in future teachings. Okay, the Asian session characteristics. Now, the pairs that are not coupled with the dollar index, or as we refer to as crosses, are most active during this time of day. The US dollar tends to consolidate until midnight New York time, which frees crosses like Aussie yen, pound Aussie, and many other pairs that cross with the busy currencies of this time of day. Now, what type of currencies would that be? Well, like we can do a pound Swiss. Those types of, to me, that's an exotic. I don't trade them. I tend to stay away from them. And that's the other reason why I don't like to trade the Asian session as well. I am not trying to discourage you from researching and studying it, because it may end up becoming your niche. It may be the thing that you are going to excel at best. So I don't want to give you the commentary in light of my own tastes and try to mold what you try to do or what you don't like or what you should like based on what I say I like. So my opinion or my personality doesn't suit well for these times of day. Like these are my family hours, okay, or as you know, my Twitter hours after market hours. But if you are a working class hero and you can't be watching the markets intraday during the London and or New York session, and you have to do something in the evening hours, but before midnight, and still have a restful sleep, you can trade these crosses at this time of day, and many times you can catch anywhere between 20 and 50 pips. Not every single day, but a couple times a week you can find scenarios like that in the crosses. So now, with this understanding, we can look at an example like the Aussie yen here. You can see a beautiful example of how we have equal lows the previous trading day, late New York, and there was an optimal trade entry sell where it runs 20 pips below the New York session lows, all the way down to a perfect symmetrical 20 pip sweep, and also a beautiful Fibonacci extension overlay. But if you are, like I said, someone that's working in the States and you're limited in your time of day where you can be active, you can supercharge the Asian session by using the cross pairs. Now, you can still get movement in like the Aussie dollar, the dollar yen, New Zealand dollar, those types of pairs, but you're going to be getting a drag sometimes because of the dollar index. you get much more volatility by having it coupled with a cross. In other words, like a Euro Aussie, a pound Swissy, something like that, where you have a lot more volatility because of the cross nature of the pair, and it's not being held back or limited by way of the dollar index. Okay, speaking of the pound Swissy, you can see this one here gives a beautiful example of a bullish optimal trade entry, and it trades above previous day's high, and it reaches up into a target 1 on the Fibonacci. So we're seeing these trades form prior to London's volatility, and we're also seeing it outside the scope of New York. So over the evening hours of the North American continent, where everyone sits down at dinner and then sits down with family time and watches TV or whatever they do. I don't really consume a lot of TV, but whatever the normal American family is doing at those hours, if you have the opportunity to look at the marketplace at the Asian session, there's about 2, sometimes 3 hours where you can really dial in and get a setup, and many times it's going to come in the form of the cross. So anything that's not coupled to a dollar but has a pair that's usually active during the Asian session, and again, that's the Aussie, New Zealand, the yen. Those pairs tend to do a lot of movement, because their countries are active. Their markets are open at that time, and even though they're smaller markets, they do start the financial day. Now, I'm going to agree on one thing. We're going to agree that the financial day starts at midnight New York time, because right now the dollar is still the reserve currency, whether you want to accept that or believe it, that's just the way it is. And what I view as the key point of the day is midnight New York time. So if we can look for that small little window of opportunity between the Asian open and midnight, that's a sweet spot for crosses. Now, there are times in the day, like in London or New York, where a cross can move, and that's going to be done by manipulation with the dollar. This time of day, the dollar is usually quiet, so we're not going to see a lot of manipulation by way of the dollar, so all the movement is going to be done by using the crosses. So if you look for a strong currency against a weak currency during this time of day, and you get an optimal trade entry pattern, you'll get many times a wonderful opportunity to trade during a typical slow period of the 24-hour banking cycle. So hopefully you found this teaching insightful. If you want to find more information like this, you can find it at theinnercircletrader.com or my YouTube channel, Inner Circle Trader. Until next time, I wish you good luck and good trading.